Welcome, everyone. Today, we are diving into the Heikin Ashi strategy using RTrader Pro. This is a fantastic way to sharpen your trading skills and make smarter decisions. By the end of this guide, you will know how to set up Heikin Ashi charts, understand what they are telling you, and use them to make informed trades on the RTrader Pro platform. Let us get started right away. Imagine trying to see a clear path through a dense, noisy forest. Heikin Ashi charts are like a guide that cuts through the noise and shows you a clear trail to follow. Let us talk about what Heikin Ashi actually is. Heikin Ashi is a charting method that makes the price action smoother, allowing traders to focus on trends without being overwhelmed by minor fluctuations. Unlike traditional candlestick charts, Heikin Ashi uses averaged price data over 2 periods, creating a more consistent and fluid visual representation of the market. This method is particularly beneficial for identifying key chart patterns such as trends, reversals, and consolidation phases. With Heikin Ashi charts, you will often observe patterns that help you understand market behavior more clearly. For instance, a series of consecutive green candles usually indicates a strong uptrend, especially when these candles lack lower wicks. This signifies that buyers are in control, pushing the price higher without significant pullbacks. On the other hand, a sequence of red candles without upper wicks points to a dominant downtrend, as sellers are consistently pushing prices lower. Another important pattern to watch for is a doji-like Heikin Ashi candle, which has small bodies and wicks on both ends. This indicates indecision in the market and often appears during periods of consolidation or before a trend reversal. Recognizing this pattern can help you anticipate when the market might shift direction, giving you a potential opportunity to either enter or exit a trade. If you have been frustrated by traditional charts that jump all over the place, Heikin Ashi will be a refreshing change. It is especially helpful in times when the market gets noisy and you want to see the overall trend without being distracted by small movements. Now let us jump into how to set up Heikin Ashi charts in RTrader Pro. First, open the platform and make sure you are in the charting section. You will want to switch your chart settings from regular candlesticks to Heikin Ashi. This step is super easy and immediately makes a big difference in how the chart looks. You will see right away that the price action looks smoother, which is exactly what we want for identifying trends. Next, you need to decide which time frame you want to use. Are you day trading? If so, you might prefer 5-minute or 15-minute charts, as these provide a good view of the short-term price movements and help you react quickly to changes. If you like to hold trades for a few days or even weeks, daily charts or 4-hour charts are likely a better fit, as they give you a broader perspective of the market trend and reduce the noise from smaller fluctuations. Once you choose your time frame, you should also be aware of the type of patterns that typically emerge in different time frames. For instance, shorter time frames may show more false signals due to market noise, while longer time frames provide more reliable trend information. Understanding this difference will help you tailor your strategy more effectively. Think about adding some indicators to your chart as well. Indicators can help you interpret the Heikin Ashi candles more thoroughly and identify key entry and exit points. Adding a moving average is particularly useful as it provides an additional trend following mechanism that can confirm what you see in the Heikin Ashi candles. The Relative Strength Index, also known as the RSI, can help you identify overbought or oversold conditions. When combined with Heikin Ashi, it gives you a better understanding of whether a trend is likely to continue or reverse. These indicators are like extra tools that make your trading strategy more robust. Another helpful indicator is the average true range, or ATR, which measures market volatility. Using the ATR alongside Heikin Ashi can help you set more informed stop losses, ensuring they are not too tight in a volatile market. This way, you avoid being stopped out unnecessarily while also managing risk effectively. You could also consider adding Bollinger Bands to gauge the volatility and potential reversal zones. When Heikin Ashi candles approach the upper or lower bands, it can indicate an overextended trend, giving you clues about potential upcoming reversals. Ultimately, by selecting the right time frame and combining Heikin Ashi with the appropriate indicators, you will have a much more comprehensive understanding of the market, enabling you to make informed and confident trading decisions. With the chart set up, it is time to understand what the Heikin Ashi candles are showing us. In an uptrend, you will see a series of green candles, typically without lower wicks, which indicates that the trend is strong and buyers are in control. These green candles with no lower wicks signal that there is little to no selling pressure, and the price is continuing to move upward with strength. In a downtrend, you will see a series of red candles without upper wicks. This means the downtrend is strong and sellers are in control. The absence of upper wicks shows that there is very little buying pressure, allowing the price to continue moving downwards smoothly. When you see these red candles in a series, it indicates consistent downward momentum. Another key pattern to watch for is when the candles start to get smaller and wicks appear on both sides. These candles suggest that the market is experiencing indecision. The presence of wicks on both the top and bottom indicates that neither buyers nor sellers have a clear advantage, and the market could be entering a consolidation phase. This type of candle often occurs during periods of low momentum or before a potential reversal. Recognizing these mixed signals is crucial because they can be an early warning that the trend is losing steam or is preparing to change direction. In addition, you may notice a transition where green candles slowly start developing wicks at the bottom, or red candles begin showing wicks at the top. This gradual appearance of wicks can be an early indication of weakening momentum. For example, if you are in a strong uptrend with green candles that suddenly start showing lower wicks, it suggests that selling pressure is beginning to enter the market and the uptrend might be weakening. Similarly, in a downtrend, red candles developing upper wicks signal that buyers are starting to step in, and the downtrend might be losing strength. Understanding these different Heikin Ashi patterns helps you make informed decisions about entering, holding, or exiting trades. By paying close attention to the size of the candles, the presence or absence of wicks, and any transitions between patterns, you can better anticipate market movements and avoid getting caught in trades that may soon turn against you. These visual cues are what make Heikin Ashi such a powerful tool for traders looking to clearly identify market trends and potential reversal points. Now let us get into some actual trading strategies that use Heikin Ashi. The first strategy we will talk about is following a trend. This is one of the most popular ways to use Heikin Ashi, because it is all about finding strong trends and sticking with them. You enter a trade when you see a consistent series of green candles if the trend is up, or red candles if the trend is down. The trick here is to look for candles that have no wicks, which shows that momentum is strong. When there are no wicks at the bottom of green candles, it indicates sustained buying pressure, whereas red candles without upper wicks indicate strong selling pressure. These are the key signals that the trend is intact and moving with significant force. Another pattern to pay attention to while following a trend is the sequence of candles gradually getting smaller. If the candles start to shrink in size, even if they remain green or red, it may indicate that the trend is losing strength. Smaller candles suggest that buyers or sellers are starting to lose momentum, which could be a sign that a pullback or reversal is near. Always be cautious when you see smaller candles after a strong series, as it often means the trend is weakening. Additionally, when analyzing trend following opportunities, you may want to consider using multiple time frames to confirm the strength of the trend. For instance, if you are trading on a 15-minute chart and see a strong uptrend with consistent green candles, checking the 1-hour or 4-hour chart to confirm the overall trend can give you extra confidence in your trade. If the higher time frame also shows an uptrend, it adds to the likelihood that the trend will continue. When you are ready to exit, watch for changes in the candle structure. If you start seeing wicks appear or if the color of the candle changes, it is a good time to think about taking profits. Wicks appearing at the top of green candles in an uptrend signal that selling pressure is starting to emerge, which might indicate that the trend is weakening. Conversely, wicks appearing at the bottom of red candles in a downtrend suggest that buying pressure is coming in, which could mean the downtrend is losing steam. Paying close attention to these subtle changes will help you exit trades at the right time and secure your profits before a potential reversal occurs. Another effective approach is the reversal trading strategy. This is for those who like to catch changes in the direction of the market. With Heikin Ashi, these reversals are much easier to see. If you are in a downtrend and suddenly green candles start forming, this could be the beginning of a reversal. To be safe, you can use an indicator like the RSI or a moving average crossover to confirm that the trend is indeed reversing. Also, it is a smart idea to set your stop loss just below the most recent low or above the most recent high to make sure you are protected in case the reversal turns out to be false. For those who are interested in fast trades, scalping with Heikin Ashi might be the perfect fit. This strategy is all about getting in and out of trades quickly to capture small price movements. You can use a 1-minute or 5-minute chart for this type of trading. The key is to watch for quick changes in the candle color and enter your trade as soon as you see the shift. As soon as the color changes again or wicks appear, it is time to exit the trade. Scalping can be intense, but with Heikin Ashi, it becomes a lot clearer when the momentum is on your side. One of the best parts of Heikin Ashi is that it works even better when you combine it with other indicators. Moving averages are a great way to confirm trends and can help provide additional context to what the Heikin Ashi candles are showing. For instance, if the Heikin Ashi candles are green and the price is above the moving average, that is a strong confirmation that the trend is up. A combination of different moving averages, like a short-term and a long-term moving average, can be particularly effective. For example, if a short-term moving average crosses above a long-term moving average while Heikin Ashi is indicating an uptrend, it is an even stronger sign of bullish momentum. Another key chart pattern to observe with Heikin Ashi involves looking for convergences and divergences between price and indicators like RSI or MACD. Divergence occurs when the price is moving in one direction, but an indicator like RSI is moving in the opposite direction, which can signal a potential trend reversal. For example, if Heikin Ashi shows a series of higher green candles indicating an uptrend, but the RSI is showing lower highs, this bearish divergence might mean that buying pressure is weakening and a reversal could be imminent. Additionally, Heikin Ashi charts can be very informative when used in conjunction with support and resistance levels. When a Heikin Ashi candle closes above a well-established resistance level without lower wicks, it suggests a strong breakout and continuation of the trend. Conversely, if a red Heikin Ashi candle closes below a support level without upper wicks, this indicates significant selling pressure and likely further decline. Another pattern to monitor is the classic double top or double bottom formation with Heikin Ashi candles. A double top occurs when the price forms two distinct peaks at roughly the same level, signaling a potential reversal from an uptrend. With Heikin Ashi, the double top pattern will be highlighted by a series of green candles followed by smaller green or even red candles, indicating the loss of upward momentum. Similarly, a double bottom, characterized by two lows at about the same price level, can signal the end of a downtrend, especially when followed by strong green Heikin Ashi candles with no lower wicks. Triangle patterns such as ascending, descending, and symmetrical triangles are also useful to observe with Heikin Ashi. An ascending triangle, often seen as a bullish pattern, is formed when there is a horizontal resistance line combined with rising lows. As the price nears the apex of the triangle, a breakout often occurs, and when this is confirmed by Heikin Ashi candles with no lower wicks, it suggests strong upward momentum. Similarly, a descending triangle is typically a bearish pattern, where lower highs press against a consistent support level. A breakdown below this support, confirmed by red Heikin Ashi candles without upper wicks, indicates strong bearish momentum. Symmetrical triangles, which can break either way, are characterized by converging trend lines where both the highs and lows are getting closer together. A breakout from a symmetrical triangle, confirmed by Heikin Ashi candles with no wicks in the breakout direction, can be a powerful signal of continued movement in that direction. Combining Heikin Ashi with multiple indicators and recognizing these chart patterns provides you with more data points, making your trading decisions more informed and reducing the likelihood of acting on false signals. This layered approach helps to filter out noise and gives you a clearer idea of where the market is heading, allowing you to time your entries and exits with greater precision. The RSI, or Relative Strength Index, is another valuable tool to use with Heikin Ashi. If the RSI is above 70 and Heikin Ashi is showing an uptrend, the market might be overbought, meaning there could be a pullback or reversal soon. This is a good time to be cautious or consider taking some profits. Conversely, if the RSI is below 30 and the Heikin Ashi is showing red candles, the market may be oversold, indicating a potential buying opportunity. You can also use the MACD, which stands for Moving Average Convergence Divergence, to confirm momentum. The MACD line crossing above the signal line is a common indicator of increasing bullish momentum. If this occurs while Heikin Ashi is showing green candles, it is a strong signal to consider buying. Similarly, if the MACD line crosses below the signal line while Heikin Ashi shows red candles, this is a strong bearish signal indicating that selling pressure is likely to continue. Another great indicator to use with Heikin Ashi is the Bollinger Bands. Bollinger Bands can help you gauge market volatility and potential breakout points. When the price moves towards the upper band and Heikin Ashi candles are green with no lower wicks, it is a sign that the trend may continue upwards. However, if the price hits the upper band and Heikin Ashi candles start showing wicks, it may indicate that the market is losing strength and a reversal could be on the horizon. The same applies for the lower band during a downtrend. Combining Heikin Ashi with multiple indicators provides you with more data points, making your trading decisions more informed and reducing the likelihood of acting on false signals. This layered approach helps to filter out noise and gives you a clearer idea of where the market is heading, allowing you to time your entries and exits with greater precision. Now we need to talk about managing risk, which is so important in any trading strategy. With Heikin Ashi, setting stop losses is actually quite simple. In an uptrend, place your stop loss just below the most recent green candle, and in a downtrend, place it above the most recent red candle. This helps limit your losses if the trend suddenly changes direction. You can also use trailing stops to lock in your profits as the trend moves in your favor. This means that as the price keeps moving up, you adjust your stop loss to stay below the recent low, so if the market does reverse, you still walk away with some profits. There are a few mistakes that traders often make when using Heikin Ashi, and avoiding these can make a big difference in your success. One common mistake is ignoring the wicks on Heikin Ashi candles. Remember, wicks indicate that there is some uncertainty or a potential change in market direction. If you see wicks starting to appear at the bottom of green candles in an uptrend, it could signal that selling pressure is building and the uptrend might be weakening. Similarly, wicks appearing at the top of red candles in a downtrend could indicate that buyers are stepping in, and the downtrend might be losing strength. Paying attention to these wicks is crucial because they provide early warnings of potential shifts in market momentum. Another mistake traders make is getting into trades too early. Just because one candle changes color does not mean the entire trend has shifted. Heikin Ashi is best used when you wait for a few consistent candles to confirm a trend change. For instance, if you see a series of green candles after a downtrend, you need to wait for at least 2 or 3 green candles without lower wicks before confirming the new uptrend. This patience helps avoid getting caught in false breakouts or sudden reversals. Additionally, some traders make the mistake of solely relying on Heikin Ashi without considering other indicators. While Heikin Ashi is an excellent tool for visualizing trends, it works best when combined with other indicators like moving averages, RSI, or MACD. Using these indicators alongside Heikin Ashi will help confirm your trades and reduce the risk of acting on false signals. For example, if Heikin Ashi is showing an uptrend but the RSI is indicating overbought conditions, you might want to hold off on entering a trade or prepare for a possible reversal. Avoiding these common mistakes can significantly improve your trading results and help you use Heikin Ashi more effectively in your strategy. Let us go over a few practical tips for using Heikin Ashi on the RTrader Pro platform. One of the best features is backtesting. This means you can test your strategy on past market data to see how it would have performed before you start trading live. It is a great way to build confidence in your strategy and refine your skills without any real risk. Spend some time backtesting different chart patterns such as trends, reversals, and consolidations to understand how effective they are in different market conditions. Another useful technique is to consistently analyze various chart patterns that Heikin Ashi provides. For instance, keep an eye on the formation of continuous green or red candles to identify trends, and watch for doji-like patterns for potential reversals. Understanding how different patterns evolve can help you gain a deeper insight into the behavior of the market and make smarter trading decisions. Be consistent with your setup. If you decide that a particular indicator helps you, stick with it. Consistency is key to developing a solid trading approach. You should also consider using multiple time frames to gain a broader view of the market. For example, if you are day trading, start with a higher time frame like the 1 hour or 4-hour chart to identify the broader trend, and then zoom in to a lower time frame like the 5-minute chart to find entry points. This way, you align your trades with the prevailing trend, improving the chances of success. You can also set alerts to help you stay on top of the market. RTrader Pro allows you to set alerts when certain conditions are met, such as a change in candle color or a moving average crossover, so you do not miss important signals. Additionally, make use of the platform's ability to save chart layouts and configurations. This allows you to revisit and reuse your preferred setups without having to reconfigure everything each time, saving time and ensuring you maintain consistency in your analysis. Finally, always take notes on your trades. Whether they are successful or not, keeping a journal of the chart patterns you have used, what you observed, and how the market reacted will help you refine your approach over time. Reviewing these notes periodically will help you recognize successful patterns and avoid repeating mistakes. The combination of backtesting, thorough chart pattern analysis, and consistent journaling can elevate your trading skills significantly. To wrap things up, Heikin Ashi is an amazing tool for simplifying the way you look at price action. It smooths out the noise and helps you focus on trends. Whether you are following trends, looking for reversals, or scalping, Heikin Ashi gives you a clear way to make trading decisions. Get your charts set up, combine them with useful indicators, and always be smart about managing your risk. Remember, practice is what makes you a better trader. Keep practicing with Heikin Ashi, stay consistent, and soon you will be much more confident in your trading. If you have questions or thoughts, feel free to share them. I am curious to hear what strategies you like best and how Heikin Ashi has helped you in your trading journey. Good luck with your trading, and thank you for learning with us today.